This is Compound Money Quietly, the CMQ Investing Podcast. My name is Chris Franco, and in this episode, we'll be discussing another counterintuitive lesson that I learned through studying the greatest investors of all time. And that lesson is this: if you want to make a fortune by investing in stocks, all it takes is one business. I'll explain all of this in just a moment, but before I go any further, this is that time of the episode where I remind you, in the friendliest way possible, to please follow Compound Money Quietly on Apple Podcasts or Spotify. Just take your thumb, find that follow button, and tap down. Now let's get to some investing wisdom that you can use to your advantage. Over the last several years, I've been obsessed with uncovering the truth about investing. And one of the sources of truth, I should say, has been the Berkshire Hathaway annual meetings. I found this quote in the 1996 Berkshire Hathaway annual meeting transcript. It's from Warren Buffett, and it goes like this: if you look at how the fortunes were built in this country, they weren't built out of a portfolio of 50 companies. They were built by someone who identified a wonderful business. Coca-Cola is a great example. A lot of fortunes have been built on that. So remember, fortunes have been built by people that identified one wonderful business and bought lots of it when it was reasonably priced. As investors, we should try to do this. We should try and identify one wonderful business that we could buy a lot of at a reasonable price and hold it forever. Now, the bad news is it's really hard to find these types of businesses. And if these businesses are already known to be wonderful, then in all likelihood, the price itself won't be. Think of it like this. There are more than 4,000 US-based businesses that offer common stock. There's probably only 10 that have the wealth-creating potential of Coca-Cola. Here's some ideas I have just on how you can narrow down the field. So let's use some of the filters that Charlie Munger and Warren Buffett recommend. You want to find a business that's within your circle of competence, meaning you're capable of understanding it. You want a business that has a durable competitive advantage. The management of that business should be high quality. They should be high integrity. And finally, since we can't pay an infinite price, even if it's the best business in the world, we have to make sure that the business is reasonably priced. That gives us a margin of safety. Now, if there is a wonderful business out there that you could potentially buy, hold, never sell, and make a fortune from, and everyone knows about it, well, it won't be reasonably priced. So I want to add a filter, and that filter is the low expectation filter. We need to buy a great business when the consensus or the herd or the majority, we need to buy it when they don't realize that the business is great. A good example of a business like this would have been Apple in 2016. You had great fundamentals, but low expectations. And that gives us a potential for a big opportunity. I have a couple more things that are just coming to my mind as I'm recording this right now. It probably would help us to look in a place where there's just less, professional investors looking and focusing on. For example, small cap stocks. There's usually less analyst coverage. There's more potential for inefficiencies that can be taken advantage of. Warren Buffett actually talked about this at the 1999 Berkshire Hathaway annual shareholder meeting. He wasn't talking about finding one business that you could build a fortune off of, but he was saying that if you want to get a great return with a small sum of money, he'd recommend beginning with these small cap stocks that are within your circle of competence. Now, another idea would be to look at businesses that are based in China. This is something Charlie Munger discussed in a 2018 interview with Li Lu. Charlie said that if you took the best businesses in the United States and then the best businesses in China, that the group of businesses that are in China are selling for cheaper. Now, none of this is investment advice. It never is. But this is sort of an investment challenge. Something that we're doing in our private group chat is I've suggested we all try to find one business collectively that meets this criteria, meaning it's one business that all it would take is to buy that one business one time at the right price, and over enough time, you would have a fortune. This is actually something that our paid members, including myself, are all going to be pursuing in 2022. If you'd like to become a paid member and have access to the group chat where we're discussing this along with a whole lot more, I've created a special offer just for those of you who are listening to this episode. The link will be in the description of the podcast, but you can also go to cmqinvesting.substack.com/wonderful. By the way, wonderful as in going back to the Warren Buffett quote about how all it takes is one wonderful business to create a fortune. Once again, just go to cmqinvesting.substack.com/wonderful. That link will give you 50% off the paid membership. Take advantage of it because it won't last forever. This has been Compound Money Quietly, the CMQ Investing Podcast. Before you go, please make sure you leave a written review on Apple Podcasts. That goes a very long way and helps more people discover the content. I really appreciate you listening. I appreciate you sharing these episodes, spreading the word, and just being part of our community. Once again, my name is Chris Franco. Thank you for listening. We'll talk soon.